Hi, it's Greg here, and I've got your daily five today. Market's been pushing higher, and it's starting to slow down a little bit, so we want to keep an eye on that. But in general, I'm pretty happy with the shape of the market so far. Starting to get some signals that things are a little frothy. Um, the biggest thing I think we want to watch for right now is to find out if we're actually going to enter this big commodities bull market that I think is coming. So a few of my top picks this time around are focused on the commodity side of things, and hopefully you'll agree with me. So anyway, let's get into the charts. So my number one pick is Cameco, and the reason I picked this one is the stock literally in the last 2 weeks has gone from $10 to $13, but it has just pushed to a new 5-year high. And when you get a big breakout like that, and look at the volume that showed up on this thing, it was 40 million shares. The average is around 10 million shares. So somebody was stepping in with a buy button in a big way. So I really like this one. They are focused on uranium. And if you've been thinking about the EV market, and of course I have a newsletter on that, so a lot of focus around the green side of things. But the big thing to be aware of is that one of the options for nuclear is it doesn't release carbon. So there's many people who think nuclear is the way to go. There's a lot of nuclear plants coming on in some of the developing world, and with that, I think the most important thing to keep in mind as we get set up for that is the environmentalists want nuclear. I'm not sure they want it as much. They want carbon less, so they're thinking nuclear is okay. And again, I'm not sure I'm a fan of nuclear yet, but the one thing I like on this chart, let's just go through a couple of the settings that make it look particularly intriguing. First of all, the price at 5-year highs is a really big one for me. I really like that. The second thing is the huge volume. I really like the fact that it's never seen volume that big on this chart in 7 years. So somebody's showing up here, and this is not nothing. This is something. So I think that's a pretty important thing. I like the PPO that ran up, pulled back, just got to zero, and is starting to bounce off that. I like the fact that it's kind of after it's made its move out of the negative territory and is starting to bounce above zero. That would be very positive. I'd love that. And again, Cameco's the biggest uranium company, if not in the world. They're definitely the biggest in North America, based up in Saskatoon, Canada, roughly straight north of North Dakota. But they're about, just to give you an idea, 10 hours north of the border, maybe 8 hours north of the U.S. border. So Cameco has big uranium mines, and they have a new plant called Cigar Lake. Not new, they had it opened, closed it, recently reopened it. But I really like the breakout on this chart. The full stochastic moving above 50 is quite bullish, and the Scooter ranking moving above 70 on the U.S. side. So that's compared to U.S. mid-caps, has pushed up into high territory. Now, what I'd like to see, obviously, I think the reason for this breakout is meaningful, and these uranium stocks, when they start to run, can go a long way. Okay, so my number two pick is Whitecap Resources, and it is an oil company, but it actually captures carbon, so it takes the carbon dioxide off, pumps it back in the earth, and actually has negative carbon output. So this is a green oil company, if that makes any sense. But the green funds are allowed to invest in it. The ESG funds are allowed to invest in it. And so I think it's quite compelling. What I like the most about the chart is this huge downtrend that we've seen going back to 2014 in relative strength is starting to break. And so that I find particularly appealing. And by the way, if I don't say it, I own most of the stocks I'm presenting today and have owned them for at least 2 weeks or more. This one I've owned for 2 months. But the point I want to make is when these stocks are here, I think they're particularly compelling, and I'm willing to put my own money to work. Hopefully that helps you. So I've got a line on the chart here right up at the top. This is kind of when it made its prior highs. And we got a lot of room to get back to that 5-year number, but we're just breaking out to new 52-week highs if we can get a little bit more lift. So I like that about the stock. The scooter ranking is up at 90. It's one of the strongest stocks in Canada, 98. And the full stochastic is up at 80. It can stay here for a long time. And I think we're just entering a giant oil bull market, if you haven't heard that from me so far. I do like the volume that came in this week as we pushed up, and the stock just did a merger this week, bought another company or merged another company in to get bigger. And the reason to get bigger is so they can attract larger hedge funds and investing platforms. Big volume. PPO is at the highest level in 10 years. I like everything about the stock. So Canadian Natural Resources is Canada's largest oil company. This company has been buying assets while oil has been in a down market for 6 years. And so they used to produce about 650,000 barrels a day back in around here. Now they produce 1.2 million barrels a day. So I think when the price of oil notches up in 2021, that they will do very, very well. And I fully expect their multiple to run up. And much like Barrick Gold is kind of the big company in the gold space, this is a really nice company in terms of low production costs, really sound management team, and big upside, I think. So I own a lot of this stock. I like it. I've owned it for a while, and a while being I bought it back here in the June-July timeframe. I like everything about it. And again, it's Canada's largest. They have oil sands, they have natural gas, they have condensate, conventional wells. Very, very good company, well run. So anyway, that's one I like. The next one is a U.S. company, a software company, and I like this one for a couple of reasons. I haven't bought it yet, but I like the breakout right here, right now. The PPO looks like it's ready to turn up at a very high level. The stock was $100 back here in May and had a huge super surge, came up, and it's just been consolidating sideways and looks ready to break out. To me, it's just moving above $300 here, $325. So as it's breaking out to the upside, I think this is a nice place to get on board. In terms of the S&P 500 outperformance, it's definitely outperforming, so I like that as well. And lastly is Shopify, and this is a Canadian company that I don't own yet. I actually got stopped out on this thing right about here, right on the lows, and was not able to get in, so I missed a big run. I'm hoping to catch it the next time around when it breaks out. So as it moves through this 1130 level, I want to be interested in the stock. Again, it's a similar to Amazon type of company. They help small businesses market stuff online. So I like it a lot. The scooter ranking has started to wane a little bit here. Price earnings ratio is outrageous, but again, a really big company, a really big growth area. So one of my favorites. Anyway, as soon as this thing starts to turn up and break out, I'd like to be a part of that. So with that, hopefully you've enjoyed my stock picks. If you've got any questions about the stuff we do, I forgot to update the Schnell Strength Index. It's at 78%. Anyway, thanks for taking the time to join me. Good luck, and happy holidays if I don't talk to you before then. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.